Okay. Well, I think there's quite a few people, so I think we'll start now then. So thank you everyone for attending this webinar on VAT, particularly from the kind of EU implications of that. We're also going to be going through a few other aspects of trade, principally the importing aspect as well, because obviously there's a heavy kind of interconnection element from that. What I will say at this point is that if there are any questions, feel free to just drop them in the Q&A box that's provided. And then at the end, when we can actually explore those questions, it gives the panelists kind of an opportunity to speak on those specific aspects. And also, if you want to kind of speak more generally, more specifically, then there will be a Q&A session at the end of this presentation. So without further ado, we'll kind of run into it. And before that, I just want to kind of introduce the Chambers of Commerce, particularly the international trade elements. A lot of you will be familiar with the international trade team and what it is we do. So more so from the trade support, so the documents and the administrative side. So you probably engage very heavily with the export team, the export documentation teams, docs, decks, anything that needs to leave the country will need a declaration or some other kind of documents. So we provide that service to a large extent, but also we also do the opportunity pipeline. So this tends to be the area that I come into. I've developed some networks abroad, either through the various governments, embassies across the world, the various international chambers that have a British kind of leaning towards them, and also some private sector parties as well that kind of have opportunities abroad. So if you're interested in those kinds of international trade inquiries, then feel free to contact me, in addition to the export support that's provided by the docs and decks team. That's my email address, so feel free to kind of contact me at any point. There'll also be another occasion with the other contact details of the panelists and myself later in this presentation, but more than happy to kind of guide on questions, again, on VAT or any kind of international trade, although I'm not an expert on VAT, hence why these guys are very kindly offered to volunteer their time. But without further ado, I just want to introduce Artis at Hoots de France, who will be talking about the kind of economic development agency support that's available. So to you, Artis.
Thank you very much, Sam. Hello, everyone. Thank you very much for taking part in this webinar. So I'm Artis Gallier. I am the Eau de France representative to the United Kingdom and the director for the UK and Ireland within Nord France Invest, which is the investment promotion agency for the Eau de France region. So our job really is to facilitate UK companies' lives and really try to encourage them to continue trading with Europe by dealing with all the new constraints that have appeared since early 2021. So that's, I mean, our overall approach, and we're here really to help. I mean, we're a 100% publicly financed agency, so all the services we provide are for free, and we're here to provide the right advice and the right contacts to make sure that you can make a success out of your trade operations, whether what you need is, for example, simply looking at setting up logistics operations locally, whether you want to create a company locally, or even whether you want to set up local production facilities. We're really here to sort of accompany you on all that and make sure that it's a success for you. Because ourselves, I mean, because we're the closest region to the UK in continental Europe, we're really, I mean, our local economy is dependent on the UK. I mean, we have the Franco-British border with Calais, Dunkirk, and Boulogne in particular, with 300 billion euros worth of trade going through that border annually, close to 5 million lorries, a really sort of complex machine. So not really straightforward to understand for many companies, especially companies who are really just beginning international trade and companies who are only dealing within the EU before Brexit. So here we're really there to facilitate things. Next slide, please. So this is a map of the region. Obviously, you will have heard of Calais and maybe Lille, but not the other cities or the other territories on your way to Paris. So to show how central it is in Europe, really, if you take a 300-kilometer radius around Lille, you have 78 million consumers with annual purchasing power of about 1.5 trillion euros. So that's really huge, and it's right away at half a day's journey by truck, for example. So in terms of centrality of markets and access to consumers, it is really important. That's really one strong asset for that region. Another one is overall efficiency. And here I'm speaking about the really dense and multimodal transport and logistics networks, but also a lot of companies who can actually provide you with the right assistance to make sure that you can efficiently continue to trade with Europe. And that's that's not just for tax and other customs issues, and companies like Unsworth and RMB Boulanger that we work with, but also border companies who can help you to make sure that you can get your goods across the border, especially for some sectors who are experiencing more difficulties. I mean, like the agri-food sector, who have to deal with sanitary and phytosanitary controls since early 2021. And finally, resilience is also another important asset for that region, with a strong diversity of sectors and an important pool of talent in quite, as I said, a wide variety of sectors. Because I mean, thanks to our large network of universities in our region, for example, we train about 10% of French engineers, and we have about 10 universities and high schools, which means that you can actually find the right talent to manage your operations over here. Next slide, please. So there's quite a strong diversity of sectors, as I said. I chose to focus on logistics because it really sort of underpins everything else, and it's really a strong one because it really makes all the other sectors more competitive. But for example, we are the first car manufacturing region in France, with companies like Renault or Stellantis, formerly Peugeot. And in that sector in particular, we're really accelerating through the electric vehicle revolution with 3 gigafactory projects, which have established in the region over the past 18 months. So which is obviously quite a big success. And the fact that it's so central in Europe facilitates things in terms of overall exports. We're also big in the agri-food sector with big companies like Teros for producing sugar, or Roquette producing wheat, amongst different products, and other big sectors like distribution in particular. You will know large companies like Decathlon or Auchan, who are actually based in this region over here. But on logistics, really, so we have the densest highway of the densest highway network in Europe, with about 12 highways. That's about 10% of the overall network, and obviously that's linking up not just sort of big French cities, but also linking up to the UK, to Belgium, Netherlands, Luxembourg, and to Germany. So making it really easy and efficient for you to be able to export your goods across Europe. We have also about 10% of the French railway network, and here we're really seeing a boom in rail freight, as in many other countries. But for example, you have a company called Cargo Beamer in Calais, which had created a new technology able to transfer containers from port ecosystems directly onto trains. And that means that containers can arrive from the UK to Calais without drivers. And given the massive shortage of drivers in the UK, that's obviously quite a good solution. And then the containers can be put onto trains and sent directly to Spain, but also to Italy. So in terms of the diversity of logistics services that are provided, that's really a strong asset. We also have quite a strong port ecosystem. You will know the Dover-Calais, very special connection given the number of ferries running every day between 2 ports. Boulogne, which is not just the first fish port in France, but also the first fish transformation place in Europe, with close to 350,000 tons of fish transformed annually. And for example, Boulogne is a very important center for Scottish fishermen who export their fish to Europe through Boulogne. So that's also a very strong ecosystem, not just for fish, but also for the whole sort of local economy around fish and fish originating products. We have the port of Dunkirk, obviously, which is more specialized in containers and has a number of global interconnections, which is also quite a strong asset in terms of the diversity of services you can benefit from. But obviously the Eurotunnel with not just Eurostars, but also the shuttle for cars, for buses and other trucks, taking you across the channel in around 35 minutes. Waterways is also a very important and booming sector in the region. I mean, it's less well known than in countries like Belgium or Germany. It's also a very strong sector, with about more than 1,000 kilometers of navigable waterways in the region. And the huge Canal Seine Europe project, which is basically a project to dig a 107-kilometer canal between the Seine River near Paris and the Escaut River in Belgium. And that's going to massively increase the interconnectivity of the waterway system in France with the rest of Europe, and they're again providing another important solution for companies to transport their goods. That's it for me on this and overall, but obviously I'm very happy to answer your questions now or via email to discuss your specific situation later on. Thanks a lot. On to you, Sam.
Thanks very much, Artis, and that's quite interesting learning about that particular region, particularly as it's I suppose the closest continental neighbour to the UK. So, like I say, Artis's details are there. Likewise, if you need kind of connecting via other means, then feel free to contact myself as well. Moving on to Unsworth now, who's going to be breaking down the kind of customs aspect of importing, like I said, specifically from the EU and the French perspective. A lot of you will be familiar with our own customs brokeraging services. And obviously still engaged with that given the relationship. But sometimes from the importing perspective, it's good to get another, I suppose, view on how that is accomplished, because obviously if something's being exported, it must be brought in as well. So sometimes in order to grease that particular relationship, it can be helpful to kind of read things from the other perspective. So with that being said, I'll pass you on to Sean.
I shall unmute myself first. Good afternoon, thank you. Yeah, we're Unsworth. We are a customs brokerage, but we like to think of ourselves more as trade facilitators. What we're offering is an ability for exporters in the UK and therefore importers in the EU to trade almost as though Brexit hadn't happened, certainly for the importers in the EU. Obviously, as is mentioned, there are two parts to the customs side of things. There is the export declaration and there's the import declaration. We're more than happy to assist with both. I think what we really need to point out on this is how vital it is that you have accurate documents and you know exactly what needs to be on those. That's one of the reasons we're here. We can point you in the right direction for statements of origin, HS codes, the need for gross and net weights, all those sorts of things. So if we could move on to the next slide, please. You'll see from that, we've been around for 48 years, we're independent, we're growing continually. And certainly from my perspective, I'm new to Unsworth, but the technology that we're working with puts a lot of our larger competitors to shame. We can offer full visibility for your customs pipeline, so you can see when your exports are being declared, when they're processed, when the import clearance has been declared, when that's cleared as well. That's something we have called Pathway. It's a free tool that we have for you, and you're able to go onto line and choose whatever aspects of the customs clearance you want reporting on. Anything that's involved in the declaration, we can include that in a report for you, or more importantly, you can include it in a report yourself. I won't touch so much on the freight part of what we do because that's not really what people are here for. But yes, we do have plenty of freight services also. If we could move to the next slide, please. So, as we mentioned before, we're here to prepare and submit your declarations to HMRC in the UK and to customs authorities in France on your behalf. Working on a DDP basis, which is what we find is best for all parties, we're taking out the need for the importer to pay VAT up front. That's a big plus, helps cash flow, it doesn't delay customs clearance, and therefore doesn't delay a shipment. Again, you can see everything online with us, you can see when it's cleared, you can see what the amounts involved are. If, for example, you're exporting goods from the UK to Belgium, but the goods are of Chinese origin, you'll be able to see what duty is applicable as well. If we could move to the next slide. So again, completely transparent. You can choose what you want reporting on. You can call it up at any time. You can do it from your mobile, from your laptop, wherever you want. We're also here to help with veterinary inspections, health certificates, all things that, particularly if you're an exporter of products of animal origin, will be key to getting through customs in a timely fashion. The last thing you want, obviously, for perishables is any sort of delays. The one thing that we are doing now by working on a DDP basis, which we encourage you to do, you're actually saving time and you're saving money because we're taking out the need for a transit guarantee, which means there is no longer any need to stop at Sevington or Ashford to pick up a T1. There's no longer any need to go to an NCTS point in Europe to close a T1. All that, it might only save you a couple of hours, but hey, time is money. So next slide, please. So as I say, we can check all aspects of your products. We can work out with you how best to classify them. Again, depending on origin, duty rates can differ. What you think might be the right HS code, we can look at it and say, well, hang on a minute, maybe this is more suitable. Perhaps there is a preferential rate of duty there, but we are here to help out on that and we can guide you through the process. Similarly, with export licenses, import licenses, we have the expertise on the ground, not a problem. So next slide then, please. I think I've already covered this. You can see from there the various ways we can report on your customs clearance processes. You can see the values, you can see VAT amounts, duty amounts, product values, you can search by commodities, all of that for whatever sort of report you want to put together, especially when the Batman comes calling. I want to see your copy C88s and E2s, all available for you online to download anywhere. And next slide then, please. So the visibility, that's one of the points that we're highlighting. Again, it's all online. You can see what you need to see when you need to see it. And that, I think, should be it for us. If there's one more slide. Well, customs compliance, obviously a big issue. We do have 2 or 3 absolute experts in this field to make sure that everything is compliant and you're not going to fall victim to the myriad of laws that are applicable in this case. Again, we're there to walk you through it. So next slide, which I'm thinking is our last now. Oh, the Gvms system. We can also assist hauliers registering for Gvms. This is the part where the haulier has to match up the declaration for the import with the declaration for the export. Again, we're there to assist with that, but it's all about submitting the reference numbers. You will be able to see this again through Pathway. It will advise you when that's completed, and therefore very little chance of delay. Next slide. Okay, we are part of the Short Straits User Forum. We arrange trips to the Port of Calais, where you can talk with the experts. We have head people in customs, we have people from French government. You can talk to them, you can ask your questions directly about how the process of, say, veterinary inspections work. You can have a look at the IBF at Sevington, which, if you're an importer to the UK, this is where a lot of the controls are going to be taking place as of 1st of July. You can also see, from an export point of view, if you are using transit documents, how that works. So we have an event coming up on the 5th of April. You can have a look on our website, find a link to that. Highly recommended, and it's very instructive. Be a great benefit to anybody who is exporting to the EU. And next slide, please. Okay, that's a little bit more on our port tours. You'll be able to see that later. I won't bother you with all the details on it. So if we can move to the next slide. And that's it from me.
Thanks very much, Sean. Like I say, the kind of export and import process is a two-way kind of system. Obviously, we can support you very much on the export side of things, and particularly from the import side of things. It might be good to have that, I suppose, that extra perspective, particularly when supporting your importing customers. If obviously you're handling the export and they're handling the import. They might want to go through a kind of local partner that's familiar with both sides of the equation. But even if you're handling things on a DDP basis, where the responsibility, particularly where licenses are concerned, falls upon you as the seller, then it's always good to have that extra kind of communication, that extra kind of network, which is, again, the benefit that the Chamber offers, because obviously having the kind of networks internationally, it can kind of give you access to people that are on the ground there. So do get in touch with our own export team, and we'll kind of help you facilitate the best kind of process and best kind of agents at any given point of that supply process. With that being said, then I will move on to the kind of VAT aspects, and I believe Alan will be taking over the first section. So I'll give the floor to Alan.
Thanks very much, Sam, and thank you, Sean and Artis, for setting me up with the most exciting bit of the webinar. It's VAT. No, you're going to love this bit. Some key facts about RMB Boulanger. We are over 40 years old. We have 900 customers in over 45 countries. And more importantly, we reported 2.8 billion euros worth of transactions to the national tax authorities in various countries throughout the EU. Next slide, please, Sam. What we do, we are VAT consultants, VAT agents and specialists in what we do. We will help you with VAT registration and compliance across all the EU member states, wherever it's needed and whatever your situation may be. We give overall VAT consultancy services, and we also have a dedicated Brexit solution that can give a short and long-term solution for getting your goods into the EU. And as some people have said before, trading with the EU like Brexit never happened. As a side for our clients, we can also act as the economic operator or responsible person, as it's sometimes called, in the EU for EC marked product. Again, depends on your situation, depends on whether that's a necessity or something you need. Next slide, please, Sam. I am Alan Vincent. I was recruited by RMB to head up the UK arm of RMB Boulanger, and my sole goal is to help companies like you get over their worries and reservations about exporting to the EU, to give you better solutions than DAP, to give you a DDP solution primarily that gets your goods into the EU with no import VAT to pay, gets your goods cleared at the shortest crossing possible, which is northern France, as Artis so eloquently put, and get your goods into that logistics hub in northern France and then out to anywhere else in the EU with no further VAT to pay, with no further customs controls along the way. And again, providing your European customers with a solution that makes you competitive with your European competitors. And it's working really well. The conversations I'm having are just really enlightening. The companies that I'm dealing with are just saying to me, we didn't know this was possible. We didn't know we could do this. Where were you 12 months ago? Well, we were here. We were talking to a lot of people, and we just haven't got around you all yet. But that's why we're here on this webinar, and happy to have these kind of conversations with you. Next slide, please, Sam. Now, clearly, what happened when we went through Brexit is we had some bottlenecks arise for companies like yourself that needed to export their goods. There was the complexity of the customs process. If you're involved in veterinary and sanitary inspections, that caused other issues because we didn't really know what was needed and what was going to be in place. The supply chain didn't know what they had to do, didn't know what paperwork they had to do, the massive administrative burden compared to pre-Brexit. And there just wasn't that awareness of the fiscal liabilities of bringing stuff into the EU from being outside of the EU because we'd never been there. And the whole VAT issue does need to be managed. You cannot import goods into France without a French VAT number or without using somebody else's French VAT number that you've appointed as a limited tax representative. Having said that, once you've got that in place, it makes it so easy to get your goods into the EU. France works really hard to make themselves really attractive to, especially to UK companies, as a point of entry into the EU. They spent millions, if not nearly $1 billion, on the Port of Calais and the smart border. As Artis said, the logistics network coming out of northern France is phenomenal, and the access to the rest of the EU and probably your target markets is just made really, really simple. And what we want to do is we want to help you capitalize on that and get your goods in as quickly as possible. Next slide, please, Sam. So the reality has been that we are no longer in the EU, as you know. So we are no longer EU harmonized, and we're now treated as a third country. So therefore, when your goods are leaving the UK, they are being exported, and when they are arriving in France, they're being imported, and therefore import customs duties are to be paid, unless, of course, you can prove that your products qualify as UK origin. But as soon as they're in the EU, they do trigger import VAT. But what we can do is we can make it so that that import VAT isn't paid anymore. As Sean rightly said earlier, there's no money changing hands anymore. There's no cash flow to worry about. It is a paper exercise now, but it has to be declared and it has to be done properly. And now, not saying that you can't do this on your own. You could do this by yourself. If you've got French-speaking experts in-house and they're happy to deal with the French VAT authorities on a daily basis in French, you could do that. Absolutely could do that. But typically, what we'd advise, what the French government would advise, is appoint an agent that is French-based, that is dealing with the authorities on a daily basis, and who can hold your hand through this and make sure that no mistakes are made, that everything's clean, everything's pristine, trucks don't get stopped, don't get returned, and all of your VAT liabilities are taken care of right across the board. And what we can do, what the first conversation that we need to have is, what is your flow of goods? Who are you selling to and where are they? How often? What kind of frequency? With that information, we can come up with the best, most streamlined solution for you for a DDP solution, involving the hauliers, involving the customs brokers on both sides of the channel, making sure that your customers get the goods with the money that they've paid for the goods, and there's no further burden on their part for customs declarations or liabilities or VAT liabilities. Next slide, please, Sam. Now, what I'd like to do is I'd like to hand over to my very good friend, Artis, who's going to talk to you a bit more about the technicalities of the import VAT deferment system that is now in place in France. Artis, over to you.
Thank you, Alan. So I'm the geek of the webinar, doing the technicalities of it. Thank you, thank you for that. Should have thought of not putting my glasses. Now it's done.
All right, I'll make you feel better, Artis.
Oh, thank you, Alan. Now, as you said, Alan, basically what I remember from your exposition now is leave the French to the French and leave the French tax agent handle the French tax authorities. That's maybe a good advice. But I'm here also to update you on the newest rules that were put in place from this year onwards. Basically, we call it internally as maybe a second Brexit that happened maybe this year, in the sense that just before before the 1st of January last year, even still, companies could import their goods into France, put themselves as the importer of records while importing the goods, while clearing the goods, paying the VAT on import to the customs broker, that is, well, in France, locally brokering and clearing the goods, and then ask for a VAT refund request through a specific procedure. Now, this all has gone now. We in France also already for some time now have something that we call autoliquidation de la TVA en importation. It sounds quite poetical, I admit, but it basically means the same thing as postponed VAT accounting, what you guys know in the UK, as not paying the VAT, but filing the operations in your VAT return. And for that, you need a VAT number. So what the French tax authorities decided is that from the 1st of January 22, the use of postponed VAT accounting equivalent in France would become mandatory. And this is what exactly happened in reality from the 1st of January. So as of now, the use of this postponed VAT accounting is mandatory. Next slide, please, Sam. And so as a result, no more VAT on import to be paid to a customs broker. I'd say even more, it's not possible anymore. Unless you are a private individual, of course, but I'm guessing that the people that are listening to us, this is not really relevant for them. And of course, because of that, you are obligated to have now a French VAT number in France if you want to clear your goods in France on your own name. So we are talking about shipments in DDP. We are talking about what is basically DDP. It's like a magical word used by everybody, but just for the people that maybe are not so familiar with these kind of terms, it's an Incoterm saying basically that there is no change of property when importing the goods into France. The British exporter, in this case, in your case, remains the owner of the goods while the goods are being cleared into France. And so the Incoterm is basically the conditions of sale saying that you will deliver to your clients gates of their warehouse in France or whatever the country of destination would be, delivery duty paid. So that's basically, I'll be doing everything. You client, you sit back and enjoy the ride. I'll pay for everything. I'll make sure that everything is fine, which is a good thing, basically, in my experience, because then the exporter has the full control of the whole process, and then you have less, of course, misunderstandings or other possible problems that could raise from multiple parties being involved in a certain process. And so the VAT refund request that some of you have known as the 13 directive are no longer possible for import VAT only. Next slide, Sam. Now, you could say, well, that's annoying because I could have imported my goods on the 31st of December, but I can't from the 1st of January onwards in France on a DDP basis without having a VAT number. That is indeed a bit annoying, but I would say it's a blessing in disguise. That's the term I like to use. Of course, it takes a couple of weeks of time, up to 3 months. Now, predominantly, we are speaking between 2 and 3 months of time to get this VAT number for your company. But once registered, first of all, by using postponed VAT accounting or autoliquidation de TVA à l'importation, you don't need to pre-finance any VAT on import anymore. You're not stuck into procedures of getting it back, waiting it for 9 months, getting questions from the French tax authorities, asking for stuff that, in general, are not understood very often, because we have the Tower of Babylon playing along here with different languages and all that, and also because this French VAT number gives then, when received, a company almost the same rights and almost endless possibilities of having then your business restarted again in the EU. You can import into France, clear your goods, and then sell it into France. You can import into France and then sell it to other EU countries. You can think about groupage, where you would import one whole truck and then divide then the truck into 5 different destinations while paying for only one customs procedure. So all that becomes available with just this one VAT number. Just for the record, and just to be sure that we don't misunderstand each other, a British company, for example, having a VAT number in France, this doesn't change anything on the nature of your company. You still remain a British company. You still pay your corporate taxes in the UK. And this doesn't create any other liabilities or obligations for your company in France or in the EU, besides filing a VAT return every month. Just to be clear on that.
So Arthur, are
Yes,
you
Sam.
saying that Are you saying that a UK company doesn't have to be established in France in order to get a French VAT number?
Oh, Alan, how many bad dreams did I have around this sentence and around this phrase? It has been a nightmare to basically re-explain that to everybody, because there was a lot of misinformation going on, especially in the beginning of Brexit. I'm thinking about January, December 2020, and then January 2021. A lot of people thought that they need to have a EU-based company. For some reason, a lot of companies also created a company in the Netherlands or in Belgium or whatsoever. This is not needed unless, of course, unless a company would like to have an accountant in the Netherlands, for example, or in France, for that matter, hire 20 people and having 10 buildings and all that. If we are talking about solely from trading perspective, getting your goods into a certain country, clearing those goods in that country, and then performing trading operations, selling or even buying or warehousing or whatsoever. Indeed, Alan, I am saying black on white, and I can sign it in blood even, that you don't need a European entity for that. Not at all. A VAT registration would suffice. So I hope I got across my message that, it's annoying, but once you have this VAT registration in France, you will be more than happy with it. I can assure you that. Next slide, Sam, please. And so many people would then say, yeah, but Arthur, that's really great. In 3 months from now, I'll have a VAT number in France and I can do whatever I want with my goods and all whatever you have described now. But what in the meanwhile? We, of course, as an agent, we realize that we can't say to our clients, you know what, guys, just hold up for 3 months, do not do anything, go on holiday for 3 months, don't sell anything, and then in 3 months from now, you'll be able to sell again into the EU. That wouldn't be a good solution. There are other ways. We will show that in the case studies at the end of our presentation in a couple of minutes from now. But in short, we also have other possibilities, such as using the regime 42, where we, as a limited tax representative, as a fiscal representative accredited by the French tax authorities in France, are allowed to rent out our specific global VAT number, or that's the official name of that kind of a VAT number, so that companies, British companies or any other companies, could import into France under a specific regime, clearing your goods into France, not paying any VAT, but using this specific regime would mean goods are not destined for France, they're destined for some other EU country other than France. And you would basically promise that your goods will leave France immediately for that other country. So this is especially relevant for companies that have a lot of trading going on with maybe German companies or Italians or Spanish or the Dutch, but would like to use France just as a tunnel country, as basically a first point of geography, from a geographical point of view, entering the European Union, and that would serve their interest very well. More about that on later on. Next slide, please, Sam. So just from a practical perspective, what is then what you need to be sure that you can live up with this format or this setup that we are promising you? A couple of simple things to keep in mind. First of all, you will need to have an EU Iori number. You can have only one. So if by chance you would have already a German one, for example, or a Bulgarian one, or whatever it would be, a European Union country one already, then you're set up for that already. So you can only have one Iori number in the whole of the European Union. It's basically a customs ID number, permitting the customs to identify a company as, in this case, the importer of records in the EU, because this is what we want to achieve. Secondly, you would need a tax agent. That would be, well, I hope so. That would be us. We would register you for VAT. If needed, you could be then using other solutions in the meanwhile while waiting this VAT number to come through. You obviously need to appoint a customs broker, both from the British side as from the European side. Pretty sure that the Chamber of Commerce will be happy to assist you with that as well. and if that would be the other way around, for example, Unsworth could assist you with the import part as well. And so, you know, that is basically it. There are, you know, 3 different well, players in this stage, which is your tax agent and customs brokers from both ends, and of course your transport company, but that choice I leave up to you guys. And so, as said before already, Alan touched that already, France remains a very attractive country for British companies, not to mention that France has a long-standing reciprocal agreement with the UK. So already before Brexit, French tax authorities announced that British companies would be whitelisted, so they would not be treated the same way as a American company, for example. No need of setting up a bank warranty with the tax authorities or whatsoever, which is the case, for example, in the Netherlands, being a non-EU company, and well, many other technical advantages that I'm happy to explain you in a one-to-one call later on. That would be it for me, I think. Sam, could you go to the next slide? We have a couple of case studies to go through.
Yeah, thanks,
Alan,
Arthur.
go ahead.
Thanks, Arthur. I'll go through these case studies, just kind of put these technical aspects into a bit of more reality for you. And I'll go through these quickly so we do have time for some Q&A at the end. But let's say your organization only sells to French businesses. So the only solution for you is you must have a French VAT number. You benefit from them from the full import VAT deferment, which, as Arthur said, is mandatory. There's no other way to do this on a DDP basis. But it does mean that there's no cash flow issues. There's no import VAT to pay. It's almost like you're paying it and you're claiming it back in the same millisecond. It's just a paper exercise. You can use that French VAT number to open up the rest of the EU for you. But predominantly on this case study, it's just if you sell to French businesses only. Again, as Arthur said, you need to appoint a customs broker in France. You need to appoint us as your VAT agents in France. And then on your documentation, your export documentation will quote your GB VAT number and your GB Iori number. But then your import docs on the French side will quote your European Iori number. As Arthur mentioned, you're going to have to need one, and your French VAT number on those import declarations, then telling the French tax authorities that that transaction has gone on your French VAT number, and it automatically puts that into a return for you, which RMB would file on your behalf. So having, like I said, having that French VAT number opens up all of the EU to you, and it really is the most cost-effective and stable solution for entering all of the EU. Next slide, please, Sam. But there could be a case, you do have the case where you sell to both French and EU-based clients. So we're still looking at putting you on that French VAT number solution. It still is the best, most stable, most cost-effective solution. However, as Arthur said, you do have a 2 or 3 month delay in that French number coming through, and that's with the French tax authorities being overwhelmed, and that's how long the process takes to come through. In the interim, because you're still importing into France, because you're still using France as a point of entry into the EU, you still need a French VAT number. There's no other way around it. But as Arthur said, you can rent out our global VAT number. Now, it's global in the sense of anybody can use it, but it is a French VAT number. So France will still have to be the point of entry for you. But in that 2 or 3 months, while you're waiting for your French VAT number to come through, you can use the regime 42, regime 4200, we shorten it, and use our global VAT number, in which case still no import VAT to pay. Your transactions go on our VAT return. And all that we have to do with you is make sure that your documentation is absolutely pristine for the whole supply chain journey. On those import declarations, on your CMRs, on your commercial invoices, you have to state that RM Boulanger are your limited tax representatives in France. You have to state that you're using regime 42, and you have to state our global VAT number on that documentation, so that if any customs officials anywhere down the line pick up that bit of paper, they know exactly what's happening, and therefore trucks don't get stopped, trucks go straight through, still no import VAT to pay. And then as soon as you get your own French VAT number, again, we'll hold your hand through that transition so that you're no longer using ours and you're using your own, and all your transactions go on your own VAT filing in your own name. Next slide, please. So this is how it looks, just a bit of a visual representation for you. You will need to request an Iori number valid in the EU. Now, some people have a Northern Ireland Iori number already. And although this is technically allowed in the EU, we do advise our clients that the political landscape with regard to Northern Ireland is choppy at best. It changes from week to week. So what we advise is that you get an EU Iori number that is mainland based, or a Republic of Ireland one, just for the stability of it, because we know it's going to be okay next week, next month, next year. So you then export the goods out of the UK, import the goods coming into France, import VAT deferment, no VAT to pay. And those companies that are established within the EU, it's then an intra-community sale between what is in effect looks like a French company to a Belgian company or a German company or Italian, Swedish, wherever it may be. But it's an intra-community sale, which again attracts no VAT. There's no VAT to charge on that sale, therefore none to collect, therefore none to give to any authorities. Okay.
So basically, Alan, are you saying that whatever the facilitative rules and exemption rules the British company knew before Brexit, they can use it all over again now, having a French VAT number? Is that what you're saying?
Exactly that. It's just like Brexit never happened. But yes, you do have to go through the process of getting the French VAT number. Yes, you do have to declare your VAT return in France. But after that, you can go to anywhere in the EU because your goods are in free circulation. So they can be sold to anywhere in the EU with no further checks, no further VAT to concern yourself with. Next slide, please, Sam. So then there is a third case in all of this. What happens if you don't want to sell in France? If your market isn't France? And I have plenty of clients who come to me and say, "Oh, we only sell to Belgium and the Netherlands." Okay, then we could go down the French VAT number route if you want. It still opens up the rest of the EU. That's fine. But in cases of expediency and getting things done this week, again, I have a client who's I've spoken to today, has a truck that's leaving on Thursday. He can absolutely use this solution. The Regime 42 solution, we can turn around in a couple of days. So we can rent out this global VAT number to you and your company. The shipments can go out DDP in a couple of days' time. You don't have to register your own name as a French VAT registrant. So you don't have to go through that process, and your goods can be shipped from the UK to all EU countries except France. Yes, they come into France. Yes, they clear in France, but then they must be shipped immediately to another EU country. Your clients, but the same rules apply. In all of these cases, it's a DDP solution, which means your clients have no liability, have no involvement in the customs process. Typically, when I talk to UK companies, when they're selling a DAP or they're talking to maybe 10 clients in 10 different EU countries, because you can only import into France now with a French VAT number, they're having to ask their 10 clients in 10 countries to get a French VAT number in order to ship their goods out on a DAP basis. Well, that's, it's either that or you use T1 documents to get your goods from France to each of the separate countries and the customs authorities in those countries and deal with 10 different customs declarations and 10 different authorities and all the T1 documents that are discharged. This solution, this DDP solution, is saving UK companies and their clients fortunes just in T1s. It's absolutely bonkers when you start to analyze your logistics cost, discharging T1s, dealing with different customs authorities and all of the things that go with that. The DDP solution is so streamlined, so cost effective. It just doesn't make sense to do anything else. Now, whether you go regime 42 and rent our VAT number, whether that suits your current business model, or whether you go your French VAT number, because that suits your current business model, we can help you in either aspect of that. What we need to do is have a conversation, see what your model is, not only now, but what you want to happen in the future, where you want to open up your markets, where you want to expand your business, so we can then give you the best solution in that.
Yeah. Alan, so basically what you're saying is that in both cases, whatever the regime is used and whoever VAT number is used, the principle is always the same. You import and you clear goods into France, and then it's followed by either local sale if you have a VAT number, either an EC delivery, so basically delivery from one EU country to another, whether that would be through our global VAT number or through the company's own VAT number, it's still the same rule, isn't it? It still qualifies as a sale within the European Union. And so it means, if I'm not mistaken, that from a customer's perspective, the one that is buying, the Belgian company or the French or the German or whatever the client is, that they're basically buying as if from a French company, as if they're buying from France, right?
Completely correct. And what they do is the money they pay is what they pay. There's no further costs for them. There's no further cost having to pay the customs officials. There's no further cost having to pay pre-finance the VAT at the point of entry of their country. So it makes non-EU companies, UK companies, really attractive, and it makes them really competitive against their European counterparts. Both these regimes are built around the same framework. They're just slightly tweaked depending on which VAT number that you're going to use. Next slide, please. So, and here's how it looks. Here's how regime 42 looks, using France as the country of import, but then immediately using an intra-EC delivery to the rest of the European Union. And then some details at the bottom of there of what boxes need to be filled in on your export and import declarations. UK suppliers, country of destination, regime 42, and your customers, obviously your customer's VAT number at the other end. Now, these are all business to business solutions. I see that in the chat we've had a B2C question, which I think Arta has already answered. Is that correct, Arta? But if you do have any questions now about B2B solutions, especially with the VAT, with customs declarations, now's the time. Either we'll open it up in a second, so please turn your microphones on and we'll talk to you live, or write your question down in the Q&A box. But that wraps up. So we've got, in a nutshell, we've got regime 42, which is where you don't have to register for your own French VAT number and you can use ours, but you can't sell in France. Or regime 40, which is standard. You get your own French VAT number, you import in your own name, you put all your transactions on your own French VAT return, and you can sell anywhere in the EU in free circulation with no other checks and no other VAT to be taken into consideration. Those are the two models. B2C is a lot more complicated and is worth a webinar all on its own, but we'll stick to B2B for right now. Next slide, please, sir. So thank you so much for listening. I hope you're as excited as I am about VAT, but please do open up your microphones now and we will open the floor to you if you do have any questions. We'll either answer live or you can write them down in the Q&A box.
Great stuff. Thank you very much, Alan and Arta. Like I said, if you want to kind of ask any questions, feel free to do that now, or likewise drop them in the Q&A box, or alternatively, here's everyone's contact details. So I'll open up the Q&As. If you want to kind of have a private conversation, however, everyone's details are here, including my own, and we'll take it from there.
Hello.
Hi.
Hi. Yes, sorry, but was this regarding the B2C question that you thought it was good to talk over, or the R42 in general?
Well, we can have a quick chat about the B2C question if you want. The R42 question that you mentioned, it isn't a loophole. and it shouldn't be treated as such or considered as such. It is a regime. It's a tax regime that's been put in place and is used all across the EU. This is not a French tax authority thing. It's a regime that's used right across the board, and it's just a different way of doing business. So it's not a loophole that's going to be closed.
Yeah, so we have been using R42 and we've got some independent advice from advisors prior to Brexit. And I think when we've been speaking to some of our advisors, they've said that sometimes the EU is saying that customers aren't, or the receiver isn't declaring the in and out correctly on the VAT returns. I suppose, is it just really making sure that you've got the paperwork in place for that so that it can't?
Exactly that. And you have to remember that the R42 regime, because it's our global VAT number, it's in our interest to make sure your paperwork's right. Because when the VAT man comes knocking for an audit, it's us that's going to get taken to court, not you.
Yeah, perfect.
So if the paperwork's not being done right, then it's the company that are renting out their own global VAT number, whether that's one of the global parcel carriers or whoever it may be, them that's in trouble. But it's them that should have control of it.
Yeah.
Alan, if I may add something from a geeky technical perspective. So we are a fiscal representative for many years now, 40 years now. It's older than myself, and so obviously this global VAT number is not being used yesterday only. We've been doing this for many years now, also with other companies. So this is not only a product for British companies, obviously. And you're completely right, Laura, when you say that regime 42 is something that can create worries if misused. The customs authorities are very vigilant and they are looking very well who's doing what. Now, I can be very proud of saying that for all these years now, we never had, a serious situation with the customs where things got awfully wrong or ugly, just because first of all we choose our clients wisely. We put in place the correct mechanism to be sure that if something is imported, this is very transparently filed, and we are very strict on that. So we can be very annoying in demanding our documents, in making sure that we get everything, but that's the other way of the medal. You do not have any obligation then to register for VAT in France, but you do have then the obligation to make sure that all documents are created correctly and contain the information that they should contain. And we, of course, then based on that, must be sure that the filing of Intrastat and VAT is done correctly through our global VAT number on behalf of our clients. So I hope this answered the question. There are lots of gossips going on that they would withdraw regime 42 whatsoever, but I don't think so. I am fairly convinced that there will be a lot of audits, and we're not afraid of it for the moment, because we know that our files are clean and our clients are clean, because we are so annoying every day asking for the documents and whatever is needed. Hope this answers a bit your question about that part. And maybe just a quick one on your B2C part. Just to be clear on things, if a company imports into France, even though you are not registered for French VAT, you must abide by the rules. So if you are the importer of records, then you must have a VAT number so that you use the postponed VAT accounting. And if you don't have a VAT number, and for example, the one of your client is used, right, then the client should be aware of that, because this postponed VAT accounting part is then to be filed by him in France. And so very often we see that because of this misunderstandings, in the end, nobody files. And this is a huge liability in terms of fiscality for both yourself and your clients. I'm very happy to have a more detailed conversation one-on-one with you on that one. But,
yes. Yeah, because it's all kind of signed off by our courier, because they say if it's ultimately we do what's called DAP plus. So the customer is the importer of record and they're residential. But as you say, somebody's got to be the importer. So what I need to do is confirm that somebody's paid import VAT.
Yeah, I can also come up with products that call DDP minus and DDP double square and to the second power. But in the end, it's the tax inspector and the customs inspector must be happy, and whatever you call the product, it must be still compliant. I'm not saying it's not. I'm just saying that it's a tricky thing, and you need to be aware of what you're doing before doing it.
Yeah, thank you.
And just one very, very quickly, because we've come to the end of our allotted time here, but just really quickly from Johnny Derry, if this process only works for DDP, how could we save cost if all responsibilities would be from our company? I think what you're looking at there is the comparison with DDP and DAP. DAP, where you hand over all the responsibilities to your European clients and they take the cost of all of that. So what you're saying is, how does that save you money by changing to a DDP option? Well, in your relationship with your client, what you're doing is you're saying to them, I'm going to save you money on transport logistics costs, on T1 documents, on customs declarations, VAT, etc., and administrative costs. So I'm going to save you all of that money. I'm going to take on that responsibility. And that gives you a real opportunity to negotiate your pricing, because you're taking off such a burden responsibility from your clients in Europe that you can look at your pricing and increase your bottom line in that respect in a lot of ways, still passing on those slightly extra costs to your European clients, but absolutely you can make more money out of that, and that's definitely a financial arrangement that a lot of my UK clients have looked at, done the analysis, and found that it really works beneficially for both sides.
I'm pretty sure that, if I may add something on this one, I'm pretty sure that, first of all, not all European clients know how to import properly, how to conduct these operations properly, and what indeed is then asked from them as the receiver and the importer of records. That's first of all. And then on the longer term, I think it would just also prevent additional fines and penalties for things that are not done correctly, because a part is being done by the seller, another part is being done by the buyer. There is a transport company in between. Things happen, and things happen all the time, and obviously the customs authorities and the fiscal authorities are keen to earn money on that. Let's call an elephant an elephant. If they can audit a company and impose penalties, they will. And that I think that can also save money on the longer term, having full control from A to Z on your process of getting your goods to your client, and along the way basically also having a good competitive position on the market, because by doing that, it would mean that you would be again just as flexible and just as easy as a supplier than your German or Belgian or other competitor within the EU would be. That your client would not struggle with you, while the Germans can just deliver it as an easy delivery. So I guess that a lot of facets determine the price, not only the direct cost of the crossing of the channel, if I could put it like that.
Thanks, Arthur. Okay, that is oh, go on then. Well, go on then, Johnny. We'll also have another question. I have some systems to be delivered directly from the supplier in Germany to 4 different customers in Germany, but we cannot do that because of VAT, as we are a UK company. What would be the solution? You could have a German VAT number, and that would facilitate that solution for you. Or if you had a French VAT number, because you did exports through France into the rest of the EU, you could use a triangulation using your French VAT number in that respect. I would have to talk to you in more detail about the exact specifications of that situation, but it is doable. So thank you everyone for your attention today. We will send out an email following this with not only the slide deck, but also a copy of the recording of the webinar for you to share with whoever you feel might gain some insight from it. And if you want to get in touch and speak to any of us individually, please do get in contact with the contact numbers or emails that you see on the screen. Thanks very much. Cheers, Sam.
Thank you very much. Yeah, like I said, if you have any questions, because we have run out of time now, feel free to kind of send that to the relevant party, or send me an email, and we'll have to kind of facilitate communications moving forward. But yeah, so thank you all very much for taking part. And like I said, when I have recordings and slides, I'll email them to the attendees and take it from there. So thanks, everyone.
Thanks, gentlemen.
Thank you.
Thank you. Thank you.